What you're watching right now, guys, is the chart of Ferrari over the last decade. You know, we have 8 years of data, and you can clearly see the performance. It has been insane. We're talking about from 2016 till today, a performance of more than 1000%, you know. So obviously, in terms of fundamentals, we have to analyze closely if this is correlated or not. So we go to the financials right here, and we're gonna activate the net income. In that sense, is per quarter, you know. So every quarter you see one piece of data, and you can clearly see over the last couple of years, the Ferrari has been performing better in comparison to the previous, you know, times in May 2016, 2017. At that time, they were making 120 million per quarter in terms of net income. But obviously, this has been increasing. I always love to see a chart like this, you know. Obviously, this is my opinion, but when you see the net income like going up every quarter, and you can even trace, you can even draw a line right here, an uptrend. This is correlated with the price. You know, the price tends to follow the fundamentals. If we see a net income that is increasing every quarter, normally this is very good, you know, because price tends to follow. So the key question here is like, will this uptrend continue? Okay, let's analyze closely this company. Let's go to the forecast of the analysts from Wall Street. We have actually 21 analysts, and the average is more than 5% from current levels. You know, that's the estimate that I have, and this is based on the future EPS and revenue. You know, the forecast that they have. So the most optimistic one is plus 29%, you know, that would be like the price going to 548. And then we have the most pessimistic one, minus 17%, down to 350. So obviously it's like, this is just estimates and opinions based on information they have. But for me, the most important factor is the EPS forecast and revenue, you know, because when we see, you know, we saw net income increasing every time. And then we have the EPS and revenue. When you see the net income going up, the revenue and EPS is also going up normally. You know, it's like actually we see different data. That's when you have to analyze closely what's happening, because maybe that's like an alert. You know, like to go out to take some profits and so on and so forth. And what we have here is like the net EPS is like the estimate is 1.87, sorry, which is a little bit worse than the previous 2 quarters, you know, but generally speaking, it's good, you know. It's actually the whole EV industry, or just makes and all brands from Europe, and you can clearly see Mercedes and other brands are suffering a lot, but Ferrari is holding, and it's holding because, you know, obviously they are targeting a very specific type of, you know, investors and obviously customers. You know, they have like a high net income, which probably, you know, they are not as affected as other people when we see like before a crash or during a crash. So obviously Ferrari right now is performing better because of this, and also, you know, the brand that they have, the products they have, the cars, absolutely amazing, you know, and they are improving every time. They are now releasing the EVs. So obviously that's gonna be like the next step further for this company. So generally speaking, the data is good actually. Maybe this quarter not that good, and actually from the price, I'm surprised, you know, that it's still going up. But obviously it's just 1 quarter. You know, the previous quarter was a little bit worse, but you know the trend is obviously going up. So as long as this remains like this, you know, like going up every time, even maybe you have 1 or 2 corrections during quarters, but generally speaking, if we continue to see this data improving, the price will tend to follow. But obviously, you know, I think the general risk that we have for Ferrari for 2025, 2026, and so on, is like the market crash. General market crash, obviously, when we have a crisis and something like this, a huge market correction as the one seen back in 2022. So obviously, that's when you have to realize some profits and maybe buy this stock after the crash. You know, that's the strategy that we have here. For instance, let's imagine a crash scenario, you know. The stock, for instance, you see a breakout right here below 400 euros. Okay, the correction that we may suffer is about 50%, you know, that's actually huge. But obviously the uptrend right here has been insane. It wouldn't be like completely unreasonable to see the stock going back to April 2023 levels, you know, and actually this is the most realistic scenario. And then we have a support level, and I would say that's the most important one, you know, because normally when we see like a crash or the market crash, it's like investors tend to buy stocks like this, you know, with a good financial data, with a good net income. So they need to see like support lines to buy the stock. In this case, we have one right here, which is actually around this area, you know, 280. I would say that's the level, the key level. And we're talking about like a market crash in this scenario of minus 30%. At this particular level, it's a good, you know, a good time to buy the stock, because you are like suffering less risk in comparison to current levels. You know, right now you buy the stock, making new highs every time. Yeah, you can buy it, but based on past experience, you know, in every stock, you can clearly see here, we may experience like a huge uptrend, but at the end of the day, corrections happen like this one or like this one in 2018. You know, that's actually a correction of, let's see, minus 30%. So obviously the scenario we may see with this stock when it's correcting is a minus 30% at least. You know, it happened every time in the past. For instance, right here in February 2020, and you know, this amazing crash that we all know when it happened, it's a minus 34, minus 32. You know, and the last one, I'm pretty sure this is 2022, which is the last one we saw, another 34%, 35%. So obviously this is the type of correction we may suffer with this stock. After a correction like this, is that it's a good time to buy based on past experience. Anything can happen, you know. If we suffer like a huge market crash, like a minus 50%, obviously the buying opportunity will be better. But obviously when we suffer a market crash like this, you know, you need to pay attention to the fundamentals, because obviously that crisis could affect the stock, you know, and we have to analyze closely how much. For instance, if we have the stock entering into losses, that would be like a very dangerous signal. You know, you have to avoid buying the stock like in negative territory. And actually in June 2020, and I'm surprised, you know, we don't see many stocks, you know, in this industry like performing in positive territory even during this mega crisis we suffered back in 2020. And at that time, they just have like a net income of 8 million, almost 9, but the rest of the quarter is completely brilliant. So generally speaking, guys, in the last 8 years, this company has been performing in positive territory in every quarter. And more than that, you know, we have all these positive surprise factors, which is normally very estimated, you know, in that sense that the investors tend to buy stocks in a positive surprise factor. It's like, so, okay, expectations were completely succeed. So obviously, if you buy the stock at this particular level, because it tends to go to the news levels, you know, it's like if we have a surprise factor, a positive surprise factor of, for instance, 10%, that means that the stock should have been trading higher. So obviously they start to buy it rapidly in order to get that new price according to the fundamentals. Now, normally this is how the theory works, you know, but obviously we have more factors in the markets. So more data. We have the seasonals, and we're going to analyze actually how the stock has been performing over the last decade. And this is very interesting, guys. It's like, let's analyze right here. The best year was 2019, 71% almost. And then the worst year is like 2022, only minus 12%. This is amazing data. This is the type of a stock. It's like, I'm not suggesting that you have to buy it right now, but obviously for the long term, it has been performing really, really well. Over the last 8 years, look at that, you know, it's absolutely amazing. Let's go to 2016 to see the whole data, you know. And obviously, with this information, only 1 year, in like 2022, in negative territory. Then we have 2018, almost like a completely flat, and the rest of the year is completely positive. So obviously, this is like a great stock based on past experience. So I would say, guys, and that this obviously you have to analyze closely, you know, and you have to study the fundamentals, but this is not the video for that, you know. We have more data here in the financials, so you can exactly see how the stock is performing in different countries, you know. We have here FERRARI by source, by country, and you can gather more information with that, you know. But overview, in the overview, you can clearly see the debt that they have, the free cash flow, and the cash equivalents. It's a really good stock. A little bit of high debt, but you know, look at the cash they have. You know, they could pay it in 2 quarters. This debt they have. So obviously, in terms of fundamentals and debt, is completely healthy in that sense. You know. So thank you very much, guys. See you in the next video. Remember to subscribe to Trading ST to watch more content like this, and leave your comments below. Is it a good time to buy FERRARI, or should I wait a little bit longer? Bye bye.